absolutely no filler, all killer from this next session. There are lots of important Americans in the UK today, but the three most important Americans are right here. With Kevin, something's just fallen off my back, I don't know what that is, I hope I can still hear things. Kevin, Joe, and Jeff, investors with money. Little confession to make at the beginning of this session. I woke up in the middle of the last night, a little bit nervous, thinking, have I put out the right clothes for tomorrow? I'd got a sort of nice pair of white pants, for the gentleman here, that's trousers in the UK, some nice boots, a sort of little jumper. Then I thought Americans like people who wear a tie. They get really cross if you don't wear a tie. So I literally got up this morning, before getting my early train here to Cambridge, and got a suit out, and found a tie, and put on a tie. Because Americans like ties. And annoyingly, the three of you have come here with no ties, Jeff.
But we also didn't come with our purple socks.
No, I did come with purple socks. So,
Fuchsia.
Tim has laid out
I'm sorry.
The challenge.
I'm sorry, fuchsia. I'm sorry, fuchsia.
Tim has laid out the challenge. We are all ultimately in business, and we're in the business of serving our audiences. And many of us are in the business of also making money so that we can employ people and better service our audiences. And three gentlemen here have been involved in the business of media and creating astonishing content for millions, nay, billions of people around the world, their whole careers. Kevin, CEO of Candle Media, I'm going to start off with you. The key question is how, in this world of change, which we've always been in, I'm not a great fan, I'm with you, Tim, actually, on this idea of this is the most vital time ever. I mean, we've been in change forever, and it's a brilliant thing, and it offers great opportunities. Kevin, just give us some sense of what is it, when you're looking at investments, that create value, that mean that you are looking, interestingly, at investments, and where does the UK sit in that environment when we know the audiences are global, they're fungible between different territories. A success in Asia could be a huge success in America, could be a huge success in Europe. Is little old England punching above its weight, or what does create real value?
Well, let me just answer that in parts. But first of all, I just want to talk about, rewind the clock back to 2005. When Bob Iger took over Disney, I was at Disney for over 25 years. So a lot of my investment experience came from those times. We had an idea, a notion that IP, branded IP specifically, would future-proof the Walt Disney Company. What do I mean by that? 2005, no iPhone yet invented. Social media in its infancy. On-demand programming, streaming services. Not really, not yet. But we knew one thing, that even though technology was going to impact our industry quite substantially in ways that we couldn't predict, we knew a couple things that were kind of undeniable. One, consumers would be more in control than ever. It wasn't up to a distributor or a content producer to tell people how to consume content. Once shelf space became infinite, everything was available. So there'd be a flight to quality, we felt. Kind of a two-headed monster, actually. It'd be a big long tail from the internet would provide. This is very, very small quantities of video that could be profitably made and distributed because of the ability of the internet to do that, and that became YouTube and some other, and TikTok now, and others, and micro dramas. And there was also an aggregation of audience around high-quality content because all of a sudden there were no frictions involved in getting that content. Used to be tons of difficulty in getting the content you wanted, and that created, I think, artificial demand for mediocre content. So we thought very high quality content, which took the form now of franchises that we're all very familiar with, under brands would kind of be, there'd always be consumer pull for that. And the way we thought about this at Disney was two types of investments. One is branded IP that you could exploit in many, many different ways. At the Walt Disney Company, it was in theme parks, it was in branded television, it was on ABC, the unbranded television, if you will. We had consumer products, which was a very big business, et cetera, all sorts of different business platforms, to which if you injected IP, we could monetize it better than anyone else. So the acquisition of branded IP was a crucial part of the growth story for Walt Disney Company. What did that manifest in? We bought Pixar, then we bought Marvel, and then Star Wars, and then ultimately 21st Century Fox, or most of it anyway. And that was all about IP and the fact that Disney was probably better positioned than any other media company to exploit that IP, and therefore we were the natural buyer of it. On the other hand, we had IP, and how could we expand the platforms through which this IP was going to be exploited? Good example of that is we were going to launch Disney Plus and get into streaming late in my tenure there, and we bought something called BAMTech, which was a full stack of technology to allow us to stream at scale. Sports streaming is the most difficult thing you can do for various technical reasons, but we bought this platform so we could really launch Disney Plus, launch ESPN Plus, and actually ultimately acquire Hulu, which we did through the acquisition of Fox. So two things, brands and IP, which is the center of what you do, and how to exploit it around the edges. Now back then, there were tailwinds in all the traditional media sectors. So creating IP meant film and TV. A couple of theme parks maybe led to IP, but really film and television was the way to do it. Fast forward to today, habits have changed dramatically. 75% of media time for people in my age group, and our age group up here probably, still is spent with film and television length content, consumed on streaming services and theaters and all that stuff. 25% is social media and games. If you go to people that are 13, but 13 to 18, it's exactly reversed. So social media and games takes up 25% of their time and effort, and 25% is traditional media. So it's been a vast change. And if you look at every slice of demographics, now these are US numbers, so it might be slightly different in the UK, but in the US, it's a monotonic and very smooth curve. All of it, there's no age groups which that march towards alternative media consumption doesn't exist. That suggests to me that that form of entertainment is going to perpetuate and not be grown out of. It's going to follow people as they age out. So big shift, and if I were investing today, which I did invest in a very big media company here called Moonbug, which has home of Cocomelon and Blippi, and if anyone has young kids, you've heard of these things. I would use social media as the centerpiece of the IP that you create, and then create monetization platforms around that social media storytelling, including traditional media for streaming and for movies. So television, movies made out of social media IP, which can include influencers. In our case, it's animated characters running around in kid stories, and games.
Yep.
So games IP versus film and TV.
So it's broader. Do you think that audience, as they grow older, will move back to more traditional forms of consumption? Because when I was my kid's age, I didn't watch that much long-form news, for example, and I do now. But do you think there's going to come back that audience, or is it stuck now in that system?
Well, given the fact that if you look across age groups, it's kind of a smooth curve going towards that new consumption pattern, that there's been plenty of opportunity for some people that were young 10 years ago to have changed their consumption pattern. They really haven't. Right. It seems relatively permanent if you just look at the math and the sort of momentum behind it. Now, will there be some shift? Yes, probably. But I do think that the days of the hegemony of long-form entertainment has passed. And even if you look at the cultural relevance of movie stars versus influencers, that has shifted quite dramatically already. So I love the idea of taking social media and finding brands, stories, and personalities, and extending that into traditional media.
Right. Joe, I'll come back to you, Kevin, again about social media and monetization in social media, which is tough. Joe, give us your view of particularly the UK, and actually, Kevin, I want to come back to you on that as well, but Joe, give us your view of the UK, where we're sitting, and the challenge that we've already heard, that how do we ensure that we grow and we create value in this sector, which is so vital to our economy?
Look, my wife calls me a relentless optimist, and let me also say, we both invest and advise. We have a slightly different business model. And I will say we've invested quite a lot of capital, time, and energy here in the UK. I have a home here. We have our large team on the ground. And we're doing quite a lot of concrete projects that we're very excited about. I think Kevin is right. I think behavior has changed. 2 years ago, I gave a speech at a similar event in Asia, And I think I upset everybody because I told them their businesses were going to shit, and that short-form content consumption had now exceeded long-form content consumption for the first time. I think we face an additional challenge, and I forget who said this to me, but it remains for me sort of the seminal issue when I think about content and creativity and storytelling. When I was a kid, banks would induce you to sign up for a bank account and give you a toaster or a blender. Somebody said, and I will tell you today, the big tech companies, they want to turn us all into toasters. And so every day I wake up and say, how does a content company avoid becoming a toaster for the big tech companies? That is our challenge. But I
Joe, just unpack that a little bit for me. I remember when I was a student being offered a record token to join my bank, and I'm still a customer in my bank. So if it's a good toaster, I may stick
But you're
with
not
you.
getting paid for it. You're not getting paid. Your content is being given away for free to induce people because you're making money somewhere else. That's the challenge we face from technology companies. And technology companies fundamentally are going to be the enemy of great storytelling and content creation over the long term, in my view. Now, I, again, am working on a lot of very concrete projects that I think are very exciting. One, make technology your friend. Numerous examples of that. Platforms that exist out there today, like Roblox and YouTube, offer an enormous opportunity for individual monetization. I'm helping Piers Morgan create a new company that I think will be the first really pure YouTube-based major global media company that will have no anchor back to any particular broadcaster or pay television business. We're doing the same thing with multiple kinds of content on Roblox, where individual creators can monetize within that platform. I have one of my clients who's here today, the only non-Chinese microdrama company, Holy Water, doing incredibly exciting stuff by creating new stories as well as taking traditional IP and slicing and dicing it into microdrama and monetizing it through a global audience. I could go on and on about making technology your friend as opposed to becoming the toaster. I also remain of a great belief that, as Kevin touched on, franchise IP and personalities will become incredibly important. There is a barbell between the great franchise IP that's out there. I think Harry Potter, we sold the Roald Dahl library to Netflix for $1 billion. The UK contains a great heritage of this franchise IP. I have a friend in the US who is, in my view, one of the best executives in children's content. He's now bringing back, Winnie the Pooh is out of copyright, and he is raising money and putting together an incredible plan around rejuvenating the Winnie the Pooh IP that'll, I think, will be very exciting, both for new media, for location-based entertainment, for consumer products, et cetera, et cetera. In a similar vein, you need to think about franchise IP in the UK around sport. Tim tried to differentiate it in his opening remarks. I would say that sport is an integral part of UK culture, and it is one of the most powerful global tools the UK has. There's incredible scripted and non-scripted stories to be told. English football is today probably the most important global sports league in the world. We just created a cricket league last year, which had an enormous success in launching this fall, and I think will continue to contribute to the growth of global cricket, which we're very excited about. We're going to be launching a new European basketball league for the NBA, which will have franchises here in the UK. Basketball and those kinds of sports will become more endemic and more indigenous to UK culture. There are countless opportunities. If you are a UK production company, if you are in the UK storytelling world, your content travels globally in a way that a lot of countries' content doesn't. One of my favorite jingoistic phrases I like to say, it doesn't matter whether you're in Singapore, Sydney, Stockholm, San Francisco, or Singapore. Kids today are watching the same film and TV, consuming the same social media, listening to the same music, and playing the same video games. Any kind of content that's created that works tends to be global pretty fast and can get monetized at global scale in a pretty fast way. So you're not just creating content for a UK market or a European market or selling a product into a US broadcaster anymore. You're delivering it into global platforms. You just need to make sure you're getting paid for it and you don't become the toaster. That's my little...
Thank you, Joe. We're going to get back to the issues of, does that mean that we're getting homogenization? How do we deal with Tim's great phrase, which was the irrational effects of creativity? We don't know what's going to work until it's worked. There are so many examples of that in creating franchise IP. Jeff, in a different world with a different sliding doors moment, you could be my boss by now because you were very keen to buy the Telegraph where I now work. That deal wasn't able to go through because of regulatory issues about the makeup of the investors. Jeff, when you look at the UK and the assets we have here, the creative entertainment assets, but also, of course, the news assets, one of which I work for, still in a takeover situation with Redbird, but not the same Redbird IMI that you were bidding with. How do we look to you, and maybe a bit of that experience, what did that feel like to you?
Oh yeah, that's I have really good memories of that. I'm still trying to figure out the whole toaster thing, but anyway, yeah. Look, I think I have a slightly different perspective. We very much believe in the UK. The biggest investment that we made, obviously, was All3Media that we made last year, because we believe in great content. I agree that social media and digital content and digital creators are a huge part of where the world is going, but we're still big believers in great quality content, scripted, unscripted. That's why we place such a big bet on All3Media, and we're incredibly proud of that. We also wanted to be in the news business as well. That didn't work out. That's okay. Life goes on. But I think it did highlight something that I just think again, big on the UK, but the regulatory environment here, I think, has to change if the UK is going to continue to thrive. Not just the experience that we went through with regard to the Telegraph, but also I think about the whole public markets here in the UK. The first half of this year, I think there were less IPOs than there had been in 30 years here in the UK. So as we think about investing in companies that we want to grow and maybe eventually take public and do that, London is not necessarily the place we would want to do that, right? And I think that we want to invest in companies here. We want to keep growing all three. We want to eventually think about bigger companies that can go public. But unless the regulatory environment and the rules around capital on the London Stock Exchange change, I don't think that that's something that we would look to do. So I think that we love the UK. We're in the entertainment. We wanted to be in news. We want to be here. I think it's great people, great content, great companies, but the regulatory environment, I think, leaves something to be desired.
Can I just build on that? So you've got the regulatory environment, which is the financial markets. That's one side, which is affecting many businesses' considerations of whether to IPO in the UK and in London.
Yep.
You also have the regulatory environment of the unique ecosystem of the UK, which Tim has already touched on.
Yep.
And is seen as a very vital part of the UK sort of creative footprint. Do you, Jeff, that we need to look at that other part of it as well? Has that kept us, is that a handbrake half on, or is it an accelerator and makes us more attractive, the fact that you have this PSB plus commercial operators? Is that uniquely valuable, or is it actually a drag?
No, I think it's valuable and helpful, but it's not the thing that brings us here to invest. If that makes sense.
What is?
What does bring us here to invest? Well, look, I think that there's a great tradition here of great producers, great content, great companies. That's why I think all of us have invested in the UK. And I think that the content that's created here travels. globally. I think the content that is created here is of a quality that's, unmatched. So there's a lot of reasons to invest here, but there's also there's some impediments that will keep us from, and I'm talking again about that regulatory world, from really tripling down here.
Kevin, you put social media, and to that I would obviously add YouTube and YouTube Shorts and YouTube social media platform, as well as their long-form video and audio. Monetization. 4 years ago, William Lewis, now the publisher of Washington Post, and myself, we started a business here, which is still running, New York and London, the News Movement, dealing with social media and monetization. What is the business model? Because if the platforms are not your friend, they are certainly unreliable boyfriends, because the income streams you can get from them can move with incredible speed. We were on Twitter, which then became X, and completely changed the way we had to approach our business model to create short-form news content for the next generation of consumers. When you look at social media, and if the companies you're considering investing in are very exposed to social media, isn't that very high risk from the business model point of view, because the tech platforms are not in your business, and if they decide that your business isn't doing their business, they'll turn off the taps for your business?
Yes, that is true. No question about it. You got me there. But
That's my
look,
toaster.
that's the toaster, I guess. Somehow that's a toaster. I still understand. I'm with you, Jeff. I'm not sure I got that, but I agree with
The toaster will be the chat.
I agree with the challenge. The challenge is there.
It means they ain't going to pay you for content. You
So
can't make
I know what
money.
I'm getting him for Christmas.
Anyway, Kevin.
So look,
Kevin, you're too exposed. We looked at buying a business, Will and I, in the News Movement, and they were so exposed to Snap, we did not go forward with the investment, because we could see they were too reliant on the single platform, that if it changed the way it looked at commercialization of its content, that business would be going under.
Yes, well, here are the issues. Platforms are very powerful things, right? That they're global in nature, as Joe said. So there's certainly some benefits to it. You launch a video on YouTube and it is immediately global. No barriers, it just is. On TikTok, same thing, except in India it's banned and a couple other countries. And it's not being banned in the US, it looks like, at this point. So it does provide global energy, dynamism. It can create stars overnight. Some of these influencers and some of these creators, especially on TikTok as a platform, overnight can have 5 million followers. It's quite remarkable. So there's fluidity and there's dynamism associated with these platforms, but they're platforms. They exist. TikTok's a great example. I was CEO of TikTok briefly when I left Disney. And it's all about the technology and the AI and how to figure out exactly what every single user wants within 3 minutes of them getting on the platform. That AI weak signal detection that TikTok has can determine your preferences without any explicit action on your part other than just using the app. It's quite remarkable. And then it delivers to you a stream of highly relevant content that basically glues you to that screen for hours at a time. And it tests every once in a while and gives you some new content to see, oh, are you over here, over here, over here? Have you changed your preferences at all? It's quite remarkable, all AI and machine learning driven. But you can't monetize on that. If you're a professional content creator, TikTok does not offer you money to put your content on TikTok. Doesn't happen. It's not going to happen either, because right now they spend zero on content. All of it is technology spend, and every single piece of content is free for them. Are they going to change that paradigm? I don't think so anytime soon. So you have TikTok, you have Snap, you have these other, you have Instagram. None of those really pay content creators. Facebook did for a little while, had some experimentation, kind of stopped doing it because the platform economics drive you that way. You don't need to spend on content. The one exception, and there's only one exception, is YouTube. YouTube started off life by sharing revenue. It was 55% in the traditional ecosystem, the horizontal video, and now they're competing with TikTok with the vertical video, and that's 45% for various technical reasons, mostly music rights. But they shared about half their revenue with creators. That created an incredible economy that has has not been replicated by anyone else. And the last thing TikTok or Instagram want to do is start taking half the revenue and paying it off to content. It's not going to happen. So YouTube is unique. And YouTube is a bit of a 800-pound gorilla in that sense. So if YouTube wants to change their algorithm in any way, what sort of videos are going to be offered up to you immediately versus what's not, what's being preferred in their algorithm, they can do that. The company that we bought with Candle Media, called Moonbug again, it has the second biggest YouTube channel in the world with Cocomelon, 200+ million subscribers. It's huge. We have 12 billion views a month on YouTube, which is unbelievably large, obviously. But our monetization is lumpy. Why? Well, sometimes YouTube decides to take their programmatic ad interface and favor our content. Other times it takes that programmatic interface and favors competitive content, or content that has nothing to do with the family audience that we serve in Moonbug. So it varies. So what you have to do, if you're a content creator on YouTube, you have to create your own monetization mechanisms, which we did at Moonbug. So we have a big ad sales force team, and we monetize just about as much on our own as YouTube monetizes for us. But YouTube, you're right. These platforms have a very central ability to control the media experience of people, of the audience. That's not going away. That does create the toaster dynamic, quite possibly, and they use that. YouTube has become more difficult. They're hard to deal with at times. They have good intentions, but they tweak their algorithm, and all of a sudden, we get, instead of 12 billion views, we get 9 billion views that month. And we got to go talk to them and say, hey, why'd you do this, 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 and this? Oh, we didn't mean to do that. That was an unintended consequence. We'll turn it back. So you do have to be very careful about it, but the power and the global nature of those platforms is really undeniable, and that is where the audience is going. I'm not saying, Jeff, that long-form content goes away and television networks are a thing of the past, but they are being eclipsed in terms of viewership and interest by these other platforms, which is something you have to contend with.
Yeah, I just think that there's, I think both will coexist. I completely agree.
For sure.
And I think that's what we're focused on is there's space for great, traditional scripted, unscripted content that we've all grown up on and that we all know. And I actually think if you have patient capital like we have and can stand the course, stay the course, that I think you're in good shape in that respect. I think there will be consolidation in this business over the long term. There needs to be, and that'll be fine too. But I think you can play in that and also play in the whole new digital creator economy and content creation, but you are vulnerable to slight tweaks in the algorithm that you can't control. And I think that's why going all in on that, I think is risky.
We certainly had to create.
Kamal, one thing, and I would just augment. Yeah. Kevin knows this. One of the things we were very fortunate. We helped create Moonbug initially. And remain shareholders alongside Kevin when he bought the company. But part of what's exciting is the idea was the IP itself, which was being under-monetized on YouTube. So now Cocomelon, having been the top kids show on Netflix, is now going to another big platform for which it's getting paid even more money. There's toy lines, there's opportunities to replicate the Disney formula around a lot of that IP. The first company that we bought when we conceived of the company was a little mom and pop UK company called Little Baby Bum, which was one of the most popular cartoons on YouTube. I remain, all that everybody just said about the platforms, I'm the most pessimistic, but I remain the most optimistic about the underlying and intrinsic value of content creation, not just from the legacy franchises of the Winnie the Poohs, but of and Roald Dahl, Agatha Christie, John le Carré, Monty Python, all of these things which I've been involved with over the years and I think have great value, will continue to have great value. It was very exciting watching what Disney and the BBC did with Bluey. There's endless opportunity for the UK creative industries to continue to capitalize on the global ecosystem away from the platforms. What's extraordinary is the UK continues to develop new forms of IP and new influencers and creators. And I won't even touch about music. If you look at all the great music, film, and television made about music, It's been about these legendary UK bands, which originated some of the most important foundational elements of the music industry for the last 50 years. The biggest company in the world, music company in the world, which owns half the music in the world, is run by a British CEO who's helped build that here in the UK, across rock and roll, across pop, across every imaginable genre you can think of. All of these things all of the global media industry is a tremendous debt to the UK, and I think the UK will continue to be, in some ways, the beating heart of the creative industry. They just have to manage around what is increasingly difficult set of external circumstances, particularly focused on these tech platforms. And that was my whole original point.
But
That's why I remain optimistic.
One second, Joe. I want to ask you about the value of talent and the value of what might be seen as sort of traditional talent, the stars we see on our movie screens, Harry and Meghan, whoever it may be. When you're looking at investment potential, how important is what might be described as on-screen talent, and I mean that from phone to movie screen, how important is that to you considering value compared with the maybe what we might describe in traditional terms as the behind-the-camera talent, the people who are producing and creating and writing, often those are the same things, but behind the camera. How do you judge talent and the value of it?
I'm going to answer in multiple ways, and I'm not doing justice to the answer. I think that on-screen talent is overrated. I once, a number of years ago, I sold the MGM Studios, and I think at the time I said, you're buying it for less than the value of the James Bond IP. And that didn't even include, it wasn't even the James Bond IP because that was in a separate entity. That was just the right to make movies out of the James Bond IP. But think about how many actors have played Bond. I'll always think of Sean Connery as Bond, but there's multiple actors, and now there's a new one. There always will be on screen. I think when you look at behind the camera, I think one of the biggest challenges, this gives me my shot to talk about AI. AI will likely destroy the world. I hope I'm dead by that time, but whatever. In the meantime, it has both the opportunity for the creative industries of substantially reduced production cost, and it's very clear that everybody I talk to in film and television is using generative AI, and I've probably seen 7 generative AI companies in the last 3 months, all of whom claim to be able to do the same thing. I can't tell whether one's better than the other yet. Obviously, that will come at the expense of a lot of jobs behind the camera. But I do think I go back to the underlying value of the IP itself, the story itself. And I think a lot of that is in this room and, provided by these. I think that there's a tremendous amount of value in the people behind the camera.
So you're
not necessarily the people building the sets anymore, doing the makeup and all that kind of stuff.
I'm going to have to ask you a little bit about AI is going to destroy us all within 20 years. I don't think you'll be dead yet then. Joe, will you? I mean, come on, you're a young man. But
I'm older than you,
give us a view to how you are trying to look at the next 10 to 20 years with that threat, it would be, of AI. Does that change the way you value content creation and IP?
Yeah, because the cost of content creation is going to decline substantially. It'll come at a societal cost. But, some of the companies I mentioned earlier are going to be entirely using AI for their production. They no longer need physical sets, green screen, You look at different things, whether it's with Epic and Unreal Engine that was used, whether it's what we did with Weta and when we sold their technology business for gaming and rendering. AI is leapfrogging all of these things. And it's going to, again, at least in the near term, create an environment where long-form content can be, and short-form content can be made at a substantially reduced price.
Yeah, but the flip side of that, what you're describing are barriers to entry for incumbents that are collapsing. That's one of the AI. So it does provide incumbents with a more efficient, I'm sorry it sounds so negative about some of this stuff, but incumbents will be made more efficient, but also might be rendered obsolete. Because if you can create long-form storytelling of the quality that you can now see out of Sora and these other, and I'm an investor in 11 Labs, which does great audio work. All of that serves to make the creation of content easier and more democratized, which is nice for, if you're on the outside looking in and want to get in. If you're an incumbent trying to defend your turf, it's very difficult. It just adds another complexity to it.
Yes, but when you can make the next Harry Potter movie, or you pick your favorite James Bond movie using AI, that's something the incumbents benefit from. But yes, they will be facing increasing pressure.
Okay, Kevin, 1 second. Jeff, just come in on this issue, because this could mean greater profits. Your production costs come right down. That's profit coming back to the front line of actually creating the new stories, the new franchise models, whatever it might be. That could be a very good thing, couldn't it?
Yeah, look, I mean, going back to where you started, when we look at what we want to invest in, one of the key things we look at is how are those companies utilizing AI to better enhance their bottom lines and their businesses. So how a business uses AI is really critical when we're thinking about investing. Having said that, I disagree with Joe in this regard. AI is going to fundamentally upend everything. Yes, agreed. You'll still be alive while AI does that.
Hope so.
But the reality is, AI will create new things we want to watch, and there won't be a lot of people involved. But just as my kids want to go see the influencer who's on all these social platforms, if this is why I think an on-screen star is still important, because my kids also want to still go see that person, and AI can't be that person. And so there's still going to be a need for great movie stars and great TV stars. Maybe not as many, but there will still be a need for that. And let's see if AI can really write with the same emotion that the great screenwriters and the great TV writers do. I don't think that's there yet. Let's see what happens.
We talked a lot about big, world famous franchises like James Bond. But Jeff, how important are formats in this world? Traitors has been an event which has gone across the globe to huge success, and also you've extended that brand into podcasting and all sorts of games and et cetera, et cetera.
Well, I think,
how does format fit into this model that we're looking at in terms of the value when you're looking at what can I invest in to grow?
Well, I think when you're looking at whether you want to make an investment in a company like All3 that had that format, which they've done an exceptional job of management with. And I think that's another thing that we look at when we want to invest in a company is how does the management team, utilize all of the programs and formats that they have, and how do they do with that? That's something else we look at. But having a format like Traders, I think, changes the entire trajectory of a company. And the reality is that they're really hard to find. This is what Kevin was talking about, what they did at Disney. It's really hard to find brands. It's really hard to find formats. When you find them, that's the whole thing. And again, I think this is one thing that's going to be really hard for AI to do. And so I think Traders has been a game changer for All3, and something that we inherited as the new owners of All3, but Jane and her team have done a tremendous job of exploiting.
Great. All killer, no filler, Joe. We've only got 1 minute 20 to go.
I just have to say, as a comment on formats, 20 years ago, I was working at Goldman's. They bought Endemol for 16 times EBITDA. And the theory was, they have these formats, Big Brother, this. And you know what? Now they're going to have a brand new global successful hit format every 18 months. 5 years later, that had no global formats. All the investors got wiped out. The thing went bankrupt and disappeared. It got bought.
I said it's really hard.
Really hard. New formats are really hard.
Joe, right, so the three of you.
Buy a toaster.
I fought against that deal because these things are really hard.
Yeah, you won't listen to you, Joe. That's a shame. I'm sorry for that. So, Kevin, just two things. You've got the whole industry sitting here, all going to be watching it as well. Two things, killer, no filler, that make value in creative entertainment media businesses.
Sustainable IP that works across platforms. It's got to be cross-platform. The more global, the better. The more it can stand the test of time, the better. The more you can make multiple versions of it, the better. So a format comes into that. That's it. That's what I would do,
great.
frankly.
Joe?
I think all content is global. I think great IP, and I think, again, don't underestimate the impact of what I'll broadly call culture. When I think about IP, it's not just about Star Wars. It's about music, it's about sport, and it's about the storytelling around culture that is going to drive a lot of value. And particularly in this country, there's such a rich history. There's so much more that remains unmonetized and undermined.
Well, to just ask you then, finally, Jeff, how do we protect ourselves against everything being homogenized into a sort of global tone of narrative, which doesn't actually allow the explosions of completely different creativity that gave us Fleabag, for example?
Well, I mean, AI will allow everybody to have a paintbrush, but there will still be a Picasso that will come along, and you have to have the ability to find Picasso, and that's really what will separate the companies that succeed and survive.
Fantastic. Kevin, Joe, Jeff, what an amazing panel. A lot of killer there and not a lot of filler. Thank you so much.